Have you ever thought that you would be the exception when stepping into the world of crypto? That with enough knowledge and rationality, you could beat the market? Mr. Pip once believed that too, until everything came crashing down. This isn't just his story. It could very well be yours. Mr. Pip used to be an ordinary person like many others, hardworking at his daily job, dealing with familiar pressures, and constantly feeling like his salary was never enough to fund his dreams. He grew tired of the repetitive grind and longed for an escape, a shortcut to financial freedom. Then came the world of crypto, shining like a promised land. Stories of massive profits, of accounts multiplying in a short time, planted in Mr. Pip a seed of hope and greed. He decided to dive in, but not blindly. Mr. Pip believed that knowledge was the key. He threw himself into research, not just understanding the underlying blockchain technology, but focusing intensely on technical analysis, TA, which he believed was the tool to predict market movements. He didn't hesitate to invest his hard-earned money into expensive online courses about Bitcoin and cryptocurrency. He dove deep into chart-reading methods and indicators. He memorized Japanese candlestick patterns, mastered how to use RSI, MACD, Bollinger Bands, how to draw trend lines, and identify critical support and resistance levels. He spent countless hours backtesting trading strategies using historical data. With what seemed like a solid foundation of knowledge and having already paid the tuition fees for those courses, Mr. Pip confidently stepped into the crypto market. He didn't see himself as just another naive newcomer, easily manipulated. "I'm going to be different," he told himself. "I've studied properly. I have a clear methodology. I won't let emotions take over like the crowd out there. I'll be the one who wins. I'll use technical analysis to conquer the market and definitely achieve financial freedom through my trades." He started with investments based on his own analysis. At first, the market played along. A few textbook trades brought in profits. Those initial gains from applying technical analysis only strengthened his unwavering belief, making him feel smarter than others, and that the road to financial freedom was wide open. He began to dream bigger, aim higher. But then, FOMO came knocking. Fiery online communities hyping up secret gem coins with promises of X100, even X1000 returns, all without following any technical analysis rules. A certain meme coin was skyrocketing, defying every indicator, screaming overbought. His logic and everything Mr. Pip had learned told him to stay out. But seeing others' account balances dancing upward, the fear of missing out on a chance to get rich quick, a chance his current job could never offer, overpowered the lessons from the books. He clicked his tongue, ignored his own analysis signals, and jumped in, right at the peak. And then, just like a pre-written script, the coin was dumped mercilessly. Technical analysis became meaningless in the face of manipulation and the crowd's frenzy. Mr. Pip lost a significant portion of his capital. But that first fall didn't wake him up. Instead, it pushed him into a second trap: bitterness and the urge to recover losses. He threw himself into even riskier projects, unrealistic promises of high returns from DeFi, flashy play-to-earn P2E games. He stopped analyzing carefully. As long as something sounded promising, he would throw in his money, hoping for a lucky bounce to make up for the earlier loss. The result? Rug pulls, collapsing Ponzi schemes, and once again, Mr. Pip's money vanished. At this point, Mr. Pip began to vaguely realize a harsher truth. The crypto market, with its facade of innovation and freedom, was in fact a massive money-making machine, designed and run by those in power: market makers, big funds, and the very exchanges themselves. They held the information, the vast capital, and the power to control prices. They created artificial pumps to lure people like Mr. Pip in and then dumped for profit: trading fees, deposit and withdrawal fees, liquidation fees. Everything flowed into their pockets, whether investors won or lost. They understood human psychology, greed and fear, and they exploited it to the fullest. The final trap: margin and futures. This was where Mr. Pip's greed and desperation peaked. He used high leverage, hoping one big win would fix everything. But the market is wildly unpredictable. Just a small move in the wrong direction wiped out his entire account in seconds. You might think you wouldn't be like Mr. Ratchet Pip, that you'll be more careful, more rational. But the truth is, we all have greed and fear. No one is immune. We can keep them in check most of the time, but not all the time. and the market is built to amplify those emotions. All it takes is one slip, one buy at peak euphoria, one panic sell in a crash for this machine to swallow you whole. And you know what? The reality is, very few people get into crypto and just trade once, then walk away. Those who win, even briefly, grow more confident, keep playing, wanting more. Their greed is fed. Those who lose get bitter and try to recover. Their fear of loss turns into reckless actions. That loop goes on and on, trapping players in the game. Most of us only truly stop when there's nothing left to lose, when the account is drained dry. Mr. Pip eventually did stop, but only when he had nothing left. He understood blockchain, but he lost the battle against his own emotions and against a system designed to exploit those emotions. This is a sophisticated and ruthless grinding machine, lubricated by greed and fear, slowly crushing the wealth, time, and spirit of those who get caught in its whirlpool, making the creators of the game richer by the day. If you see a part of yourself in Pip's story, share this video so more people don't follow the same path. Pie from us. Thank you for listening. See you in the next video.